Dubai's Purchasing Managers Index reaches its highest level in 3 years, and Dubai Holdings selling a 12.5% stake in Tecom. You're watching the Daily Brief with Forbes. I'm Ramia Faraj. Dubai's Purchasing Managers Index for May reached its highest level since June 2019, coming in at 55.7 from 54.7 in April. But the PMI update from S&P Global shows cost pressures are also building up, driven by energy market volatility. Travel and tourism rose at the quickest pace for nearly 3 years, but wholesale and retail growth eased to a 3-month low, while construction recorded the first decrease in new work since last September as both businesses and households battle inflation. Dubai plans to sell a 12.5% stake in business park operator Tecom Group in an IPO. State-owned Dubai Holding will sell 625 million shares in Tecom, with the government reportedly aiming to raise at least $500 million from the listing. It's the second offering by the government this year to boost trading volumes and increase liquidity on the exchange. The price range will be announced on June 16th, the same day when the IPO starts, and it's expected to be listed on the DFM on July 5th. The efforts of OPEC Plus to boost oil output are not encouraging. That's according to UAE Energy Minister Suhail Al-Mazroui, who says oil prices are nowhere near their peak yet, as an upcoming rebound in Chinese demand is expected to pressure an already tight global oil market. Mazroui says OPEC Plus is struggling to restore production as planned, and only a few members have spare capacity. He says without more investment, OPEC Plus can't guarantee enough oil supplies. Politics are to blame for the postponement of a U.S.-backed deal to supply electricity to Lebanon from Jordan via Syria. That's according to Lebanon's Energy Minister Walid Fayed, who says the World Bank is tying it to some kind of political diligence. He says the bank, which had vowed to finance the project, is also adding more conditions, although they were clear at the start. The delay would exacerbate shortages as Lebanon approaches its summer season with a rise in energy demand. Shanghai began imposing new lockdown restrictions today, with residents of the sprawling Minhang district ordered to stay home for 2 days in a bid to control COVID-19 transmissions. It comes as new data shows China's exports rebounded strongly in May, with factories restarting supply chains and untangling as Shanghai slowly emerged from its grueling 2-month COVID lockdown. As restrictions eased, shipments bounced back 16.9% year-on-year in May, up from 3.9% in April. The European Central Bank is set to announce the end date to its bond buying stimulus today as inflation concerns grip policymakers. The stop is a prelude to the ECB hiking rates for the first time in over a decade in the weeks that follow, ending an era of ultra-loose monetary policy. Inflation in the Eurozone rose to 8.1% in May, the highest level in the history of the currency club and well above the ECB's own 2% target. Sweden-based Spotify says it aims to have 1 billion users by 2030 and annual revenue of $100 billion in a decade. Officials say the ambitious goal could be achieved through an expansion of Spotify's portfolio of podcasts and audiobooks, while making the platform a one-stop shop for content creators. It says it will provide the infrastructure and resources that will enable 50 million artists and creators to grow and manage their own businesses, monetize and promote their work. American golfer Bryson DeChambeau plans to join the controversial LIV Golf Series in one of the biggest blows yet to the PGA Tour by Saudi's cash-rich upstart golf league. LIV Golf prepares to tee off at its first ever tournament today near London. DeChambeau's next step may be to quit the PGA Tour entirely, as Dustin Johnson, Kevin Na, Louis Oosthuizen, and Sergio Garcia all resigned from the PGA Tour this week in favor of LIV Golf. I'm Ramia Faraj. This is the Daily Brief. Thanks for watching. Bye for now.